All right. Happy Monday, everybody. Me coming to you again. We were out of the office last week, hence the extra brown this morning. But lots going on in the marketplace, so let's dive into it, shall we? All right. So, as we always do, we're going to start out with the oil prices. WTI was doing really well with the talks of the truce, etc. As you very well may know, the truce did not last, and so now Brent crude has gone from 73 to about 82. WTI is up about $7-8. We're looking at last week's averages here on the screen. Those gas prices were indeed lower, but unfortunately, I think they're going to start creeping back up again. Now, what does that mean for the inflation, which is going to be really important? So the CPI, Consumer Price Index, is going to be released out for June tomorrow. Now, it's important that we notice this is going to be June numbers. June's oil prices were coming down, weren't they? So that's going to affect what it is that the CPI read says. So we're expecting it to come in 0.1% better than the last time. So, we went from 4.2 to hopefully 3.9 tomorrow. I've got the thing from last week up there on the upper right there where our good buddy Kevin Walsh there wants to trimmed mean measurement, throwing out the highest, throwing out the lowest, using the middle, basically making up his own numbers. But we'll see how that works out. We'll see if it gets reported like that as well as like this. So we'll have to wait and see. However, inflation coming down is good news for mortgage bonds, and mortgage bonds have been suffering as of late, and so have rates. We're going to talk about that in a moment. Right now, what we're seeing in the bond market is a pretty hard contraction there today. In the red is what you see right there. On the books for this week, CPI comes out tomorrow. PPI, Producers Price Index, comes out tomorrow. Mr. Walsh will be testifying in front of Congress both Tuesday and Wednesday, so that'll be interesting to unpack all those things. But I put the 10-year bond on the bottom there for you. I think that's a really important thing to look at. And unfortunately, 4.59 was the highest we had seen up until this point, and now we're seeing it at 4.61. When I say up until this point, I mean for the last couple of months. Be sure to follow us on those Instagram updates. We post them daily, and that way you're in the know as to what happens with all of these things. But the two reports we'll be watching for you this week, CPI and PPI, also retail sales to see how many of us are out there still spending money. What's going on with rates, you ask? Well, as compared to the 29th where I left you last, we were at 6.52. Today, national average is 6.72. Sorry. And jumbos went from 6.75 to 6.85. So as my buddy Mark says, no bueno there. Remember, these are average rates for 780 credit scores with 25% down. Visit with your favorite guy or gal to make sure that those numbers are correct for you. Okay? All right. Well, as always, like, subscribe, comment, share, push all my buttons to make sure that everybody gets to be as smart as you are. And we're always just a phone call away if you need anything. Good luck to you and hang in there. Bye-bye.